I would say that the crypto ecosystem actually needs Africa to reach its full potential, because for such a long time we've been talking about mass adoption and real world use cases to the average person, not just the crypto economy. And that's happening in Africa. So crypto needs Africa more than Africa needs crypto to reach its full potential.
Welcome to ABCDE Podcast. I'm your host, Joy.
I am Lao Bai.
In this podcast, we'll be exploring the latest groundbreaking ideas, cutting-edge technologies, and game-changing development in a decentralized world. Hey, Yoseph, how are you? I think today is more towards understanding Africa, is especially a deep dive into the African market. And as we know, Africa is a diverse continent with varying economic as well as geopolitical landscape. So how does it different from the other countries around the world?
Yeah, so Africa is not a country, it's a continent of 54 countries. It is 1.4 billion people, same size as China, roughly, but it is very young. Median age is 19. It's very, very young as a result of that. And if you project the population of the continent in 27 years from now, it's going to be close to over almost 2.8 billion people. So it is a population that is doubling in size. You don't find that type of demographic anywhere in the world. And in about 25 years from now, the median age is going to grow from 19, where it's at right now, to only 25. So if you expect the future workforce of the world and where the young people are, it's going to be in Africa. So that's one of the most important things to keep in mind. The second part of the African economy and society is that it is very, very diverse. It is very fragmented. And so there's a lot of cost in coordination economically and socially across the continent. Technology has been a big part of Africa's development and journey so far. We skipped landlines to mobile phones, and that was a huge leapfrog moment that we had as a continent. And now we have 93 mobile accounts for every 100 people. So mobile has penetrated so fast across the whole continent. And we access the internet on mobile as well. The majority of internet use on mobile, 590 million Africans have access to the internet at the moment, and that is growing at 6% year over year. So it's not just a continent that is sitting in the dark. There's a lot of mobile connectivity, huge level of urbanization. And the more urban people are, the more access to the internet they have. But then we also skipped very traditional banking with mobile money. I don't know if you know what I mean by mobile money, but it's basically your phone number is your bank account. And I can text you and send you money because my wallet is associated with my phone number, and so is yours. So we are basically used to digital money for a much longer period of time than the rest of the world. And last year, we had over $700 billion of value being transacted through mobile money. And there are 621 million Africans that have access to mobile money. That's another very different dynamic of how we've leveraged frontier technologies. And the third bit is crypto. Crypto has been growing very fast in the African economy. It is still relatively small in total dollar volume. I think last year we had $116 billion, which makes about 2 to 3% of the global crypto market. But it's not just the total number, it is the number of people who are using crypto. So people are leveraging crypto now to facilitate cross-border payments and transactions. People are using crypto to do micropayments, which traditional banking systems don't offer you. So kind of zooming out, we've leapfrogged generations of infrastructure building, landlines with mobile. We have leapfrogged traditional banking with mobile money. And now we're also leapfrogging sort of nation state-based payment systems with crypto-based payment systems. So it's very hard to imagine Africa as a developing region because developing assumes a linear path to get into a destination of prosperity. Africa is growing at a very exponential rate. And I call it more of a frontier market because the path that is ahead of it is not the same as other regions. There might be some parallels, but it's not exactly the same. Therefore, it's hard for me to imagine it taking a linear path.
Yeah, that's quite impressive when I heard 2 to 3% of the crypto users are actually coming from the African regions.
Actually,
And
it's not number of users, it is volume of transactions. Actually, if you think about number of users, it's not concrete data on it because it is hard to track self-custody wallet transactions based on region. But some data I can give you is Nigeria is number 2 in the world for crypto adoption index, according to Chainalysis. MetaMask says that Nigeria is number 3 in the world for MetaMask wallet users. And we see high number of use for Trust wallets and exchanges as well. So most African countries, you see between 5 to 15% of the population has interacted with crypto in some shape or form. In certain countries like Nigeria, like South Africa, Kenya, make up even higher than that, closer to 20+%. So it's actually more than 3% of the user base. It is a much larger user base. That's just the volume of transactions based in dollars.
Got it. Got it. I would like to know more about the transactions. Like, what's it like? Is it like the smaller amount, high frequency, or larger amount, low frequency? And what are the players in this, volume? Is it institution more or retail is more? I believe retail is more,
So
but I would love to hear
yeah,
as well.
retail drives more, but institutions drive more as well. The main thing I'd say with crypto is let's be very honest. In very advanced economies, such as the US, Europe, including China and other parts of Asia, the fundamentals of crypto, they're not solving any meaningful problem at scale. So a huge part of crypto so far is only adding value within the crypto economy, meaning people who are crypto believers, who love privacy, who love self-custody. That's who we're serving. When you move to the African continent, the fundamentals and primitives of crypto, they're actually addressing real people's needs. So if you're looking for utility of crypto, we're finding that in Africa. That's where it's at. And you ask, why is that? Well, one is because, as I mentioned to you, we have 54 countries, right? Same population as China, but 54 countries. And what that means is the transaction cost in global trade between our countries and between Africa and the rest of the world is very high, especially if you're doing small types of transactions. So for example, if I'm to send money from Ethiopia, which is where I'm from, and Kenya, which is next door, most transactions are relatively small, below $1,000. You're going to spend close to 10% of the total amount just for the fee alone if you're running it through traditional payment rails, such as Western Union or MoneyGram or to the banking system, right? And so 86% plus of the crypto transactions that we're seeing on chain, it is actually to do cross-border payments. And a lot of it is small players, right? So that's one thing a lot of people are using it for. The second use of crypto that we're seeing across the continent is we have very unstable currencies. Many countries across the continent, the major countries actually have an inflation rate between 10 to 20% a year. So your value is going down. Second is banks don't have access to dollars. We have a huge Forex shortage. So people are coming to crypto to access dollars more than they can find through the banking system. So US dollar stablecoins have found a crazy product market fit in Africa, right? So cross-border payments, currency devaluation, hedge, accessing US dollars. And third that we're seeing is actually earning income or earning money or interest in foreign currency or in more stable denominations. So people would prefer to do peer-to-peer trading, buy crypto stablecoin, and then put in some earn pool or a savings pool where you're earning 5%, 6% in US dollars, which is so much more better than actually holding a local currency. And last is now we see bigger institutions such as fintech companies or even manufacturing oil and gas companies using crypto directly or through intermediaries to do cross-border transactions and settlements. And why do you ask that? Well, because it is cheaper and it is faster for them to do so. So that's more of the institutional user base, right? And so on one side, we're seeing retail users coming to crypto because traditional finance or banking systems don't offer them clear services. And on the second part, it is cheaper and faster to do cross-border payments for bigger institutions.
That totally makes sense. I think this is where we see the mass adoptions of cryptocurrency actually, has the true value and can apply to this different like cross-border payment scenarios. That's quite interesting. So I would love to focus more on the regulation, as you mentioned, because you said, Africa is made up to 54 countries, and I believe navigating regulation in this crypto space can be quite complex. I would also love to know more about that, like the regulatory policies and is it easy to get access to cryptocurrencies? What are the general attitudes of different policymakers?
So the first thing I'd say on that is crypto has been thriving in Africa despite regulation, not as a result of regulation so far. And this is just based on the track record that we've had. In terms of regulation, basically, many of the major countries cannot ignore crypto. So they are trying to figure out how to regulate it, how to protect people and users in a much more thorough way. There are some countries that have outright banned it, like Egypt and Ethiopia and several other countries, but South Africa, which is the biggest economy, has provided regulatory clarity even for institutions to come and use crypto. So you got to do your KYC and AML, but there are regulated exchanges in South Africa, for example, that are providing crypto services, and there are companies and startup ecosystems. There are a lot more countries across Africa that are been experimenting with sandboxes. So it's basically the intermediary step between where we are and fully regulating it, which is creating these spaces, sandboxes, where startups can join the sandbox, experiment with the product, work with regulators. Countries like Kenya have rolled out a sandbox. Zambia has one. Ghana and Nigeria is exploring that as well. So there are sort of a number of regulators that are basically putting the time and energy to learn and understand more about the landscape. But let me put it in some context for you as well. So Chainalysis came up with a report saying that last year there was $56 billion worth of money coming to Nigeria alone using crypto. And Nigeria's economy, GDP, is around $440 billion. So a huge, significant percentage of the country's GDP has come in through crypto. Those are stats that you cannot ignore. Basically, a lot of regulators are trying to wrap their head around. And if some regulators say, hey, we're not going to allow crypto, we're going to make it harder, my sense is people are still going to be using crypto in some shape or form, not just to speculate and trade, but to do the basic stuff that you want to do for your economy to thrive. When local banks have a maximum of $20 a month of payment globally that you can make with your bank card, how on earth can you actually transact with the rest of the world, right? If your bank has a limit of $500 or even $1,000 a month that you can send globally, how can small businesses and little shops that are importing goods from overseas acquire those items? In many ways, I think crypto is providing a frictionless sort of global payment that local institutions are not offering. So basically, regulators have to come around it and figure out how to work it. And I'll go as far to say that crypto has a lot of advantage for African governments and players, because 40 African countries don't even print our own currencies locally, right? The physical bills that we use, 40 countries printed in Europe, and they spend about 6% of the total money supply for printing fees and shipping costs, right? It's a huge amount of cost that you're paying, and you don't maintain, a level of sovereignty of where you actually get your physical money printed. So digital currencies become so much more attractive. 14 African countries that were colonized by the French government, they are on the CFA, which stands for French Colonies of Africa. It's basically a currency that is pegged to the euro. As part of that agreement back in the 1960s, 50% of all the foreign currency reserve sits in the French treasury, right? And French governments decide how much money you can print and what interest level you can have. For a number of these countries that practically don't control their monetary policy, the fundamentals of crypto digital money is quite interesting and is very attractive. So I'd go as far to say that, when regulators get their heads around, there's a lot more benefit and value for them by actually embracing crypto.
That makes sense. And I also wanted to mention about the trust infrastructure, and building trust in a system is very crucial, especially in the crypto space. From your perspective, what are some practical applications of this trust infrastructure that you envision in that region?
Ultimately, in my view, what the blockchain solves for is trust. Basically, I don't need to trust who you are to have a trusted transaction or a trusted contract or agreement with you. That's what fundamentally the blockchain and smart contracts are helping address. When you look at many African countries, the one area of deficit that we have is trust. We don't have institutions that are 100 plus years or even 50, 60, 70 years of consistent execution track record of doing something persistently and getting better at it to inspire a level of trust from their citizens, right? We don't have banking and financial institutions that have been there for a long period of time, that are consistent and persistent and providing services to the average person. Because of this, we suffer from huge trust gaps from land titles and property rights, knowing that this piece of land is yours and the data is immutable, that no one has gone and changed it or doctored it, right? Knowing that you are who you say you are. We have 500 million Africans that don't have any form of legal ID. That makes doing sophisticated economic activities very costly and very challenging, right? So what the blockchain and cryptos, in my view, is addressing fundamentally is trust. What I see high level of applications in African economies around trust is around identity, around reputation, around property rights, around putting data on a ledger that no one can go back and change, and that can be transparent or visible. I think a lot of these fundamentals are so well made for the context and challenge that African governments and economies are. So many crypto players and builders, they're basically having to bootstrap trust. Let me just give you one very specific example. One of the biggest challenges that we have in the traditional financial system across Africa is credit. Banks lend to bankers. It is very hard for a regular person to access credit from a banking institution. That's gone for the majority of countries. In that meaning, countries like Nigeria, several parts of Kenya, some of the most populous countries on the continent. It is hard to access credit through the banking system. Where do normal people go get credit? Well, they get credit from fintech providers or small loan sharks. At what rates, though, right? If someone is giving you credit, well, in a number of the countries that I mentioned, the average person who is borrowing money uncollateralized debt, because if you don't have assets to collateralize, that is protectable and used to basically get any form of credit for, then you're basically borrowing without any collateral. Even if you have a house, you cannot put that, as a collateral. If you have a car, you cannot put that as a collateral. Then you're just getting money without, anything to back it, and you're paying interest at 15 to 25%, sometimes 30% a month. That is a month. That is interest that you're paying as a small business, as a shopkeeper, as a person who's trying to get some working capital. That's the interest you're paying, right? Which is ridiculously high. And there are many lenders. I can get basically a credit from one lender, but that lender is doing the risk assessment on one-on-one basis. So even the more sophisticated lenders, whether I've been a customer for a week or whether I've been a customer for 7 years, they're giving me the same flat rate interest. I go to another lender, they're doing their own risk assessment from scratch as well. So these guys are not sharing risk. They're not sharing credit scoring. They're not sharing anything about me with each other. Therefore, the customer loses. The customer is the one who's having to pay, close to 30% interest a month for getting some working capital for the small business, right? Creating identity and reputation, credit scoring on chain, in my view, can really help unlock a lot of economic potential. Most of the developed and more advanced economies, they kind of got there based on credit, right? I think good credit has really grown many economies around the world. And in Africa, where a lot of businesses are small businesses, you need to have access to credit. And then accessing global liquidity is a huge part of it, right? So I think coming back to trust, putting certain things on chain that we all rely on, we want a single source of truth, no one can go and change, is such a huge value add for many parts of the African ecosystem.
That makes sense. It actually integrate all these resources and data and put it like open source for everyone to check. And I think this is a great progress. But I would also love to mention about the trust between people, like between people and cryptocurrency. The first time I'm using my own wallet, I was like trying to fix this and that and trying to build, some of the, I would say,
Yeah.
okay, this is thing, and then I have a try, right? So in terms of like the education process, what do you think are the good applications to educate people actually using the cryptocurrencies as a payment method? I think this is going to be a huge barrier for people switching from the fiat currency to
Yeah.
cryptocurrency.
Yeah. No, I think that's such an important one because most people I know in crypto have been scammed in Africa at least once. Everyone has been scammed, right? You go in a room with young people and they all got into crypto, especially people who are working in the industry. Many young folks that I meet, they're getting in this space because they've been scammed and they want to protect others from being scammed. So I think that's a huge problem, and I think trust there really matters. Centralized exchanges have played a role in onboarding a lot of players. Binance has been very active and huge on the continent, but we also have several local exchanges such as Voller, Yellow Card, Luno, Bitmama, and a lot more localized exchanges and that have track record and that have shown the ability to onboard and offboard people. And after the FTX collapse and activities, more people are coming to self-custody as well. That's becoming more interesting for users. But there's huge amount of friction in the crypto world to on-ramp and off-ramp, especially with self-custody. And I say that actually African startups, they're getting way more advanced in the on-ramping and off-ramping side than many other economies. If you're in Kenya, for example, peer-to-peer, or Nigeria, in fact, peer-to-peer on-ramp and off-ramp is the number one way for people to buy and sell crypto. Basically, you and I do a trade through an intermediary, through an escrow account. You say you're going to sell me crypto, you put your crypto in an escrow, I send you fiat either through mobile money or through mobile banking, and that is instant settlement. And then you release the escrow account, right? And some level of reputation matters there. If it's an exchange, then you have score and how many peer-to-peer trades you've done and how many people have been happy with you. And I look at that before doing that transaction. So, different ways of on-ramping and off-ramping that are becoming more used. But I think we've got to really reduce the level of friction in the crypto self-custody space predominantly. And it's coming. We're just not there yet. Email login, mobile phone login, social recovery, gasless transactions and fees. I think all these things help create lower friction on ramping and off ramping.
That makes sense. What are the most popular, I would say, popular dApp in African regions? Is it lending or is it payment more? I would say popular, as in which aspects you think can be, doing this kind of like mass adoption?
The stuff so far is peer-to-peer transactions, so peer-to-peer trading to on-ramp and off-ramp. And the second is earn and different savings pools for people to basically earn income and earn interest in stablecoin denominations. So US dollar stablecoins are the number one uses for crypto, especially in the current market, and peer-to-peer and earn. And now there's a wave of startups that are basically adding a digital card to your crypto wallet. What that basically is it allows you to pay your crypto, to pay global, to make global payments, with your crypto assets, especially when you cannot do, different types of payments with your bank card, right? So they're basically building the basic financial services on chain by allowing you to transact with your crypto assets.
Got it. You also have a fund specifically investing a lot about public goods, about the infrastructure. I would love to know about the investment thesis.
Of course, I have a fund called Lava, and we invest in early stage African startups or Africa market targeting startups that are building the simple financial services for the normal user backed by the blockchain and crypto. So our thesis is basically building our financial services stack in a modular way, but targeting very simple services. So everything from stable coins, on-ramps and off-ramps, wallets, payments, savings, and earnings and credit, and escrow management, like the very simple financial services that an economy relies on, but people building that in a modular way and on-chain, and very much focused on early stage startups and long-term builders that are helping create the financial infrastructure of the continent on-chain. And a huge part of me is also quite traditional, I'd say. I like to have companies that have a clear business model and that have revenue based and that can charge a fee or a service in such shape or form for what they're adding to the ecosystem. And I think that's very important. And I think Africa is probably the one place where you can do that for crypto products because it's got a real value for the normal user.
Yeah. We've already seen some of the founders, because I talked to some of the founders, they are really super interested into this African regions and wanted to have some of their real world assets, related protocols applied to those scenario. So that was quite interesting. It was lovely talking to you today for about 30 minutes ish, and we covered a lot of aspects in terms of the different countries' economies, landscapes there in Africa. Any last minute add-on you want to add into this conversation?
Yeah, so I think crypto is very exciting. It's in a very interesting phase in its journey. And I would say that the crypto ecosystem actually needs Africa to reach its full potential, because for such a long time, we've been talking about mass adoption and real world use cases to the average person, not just the crypto economy. And that's happening in Africa. So crypto needs Africa more than Africa needs crypto to reach its full potential.
That makes sense. It's a necessity.
Awesome. I hope it was useful.
It's very useful. I actually learned quite a lot through the conversation we
Amazing.
had. Yeah, amazing.
Amazing.
Thank you.
Thanks so much, Eric.